gentlemen, welcome back to another episode of the Jack Mallers Show. I am your host. Boom, boom, boom. Ha ha. Screwed it up again. Not a professional podcaster. I am your host, Jack. It is Monday. Honestly, we should just make that part of the ritual. Just echo my voice in your ear as if the first yo isn't obnoxious enough. I'm Jack. You're listening to my show. It's Monday. I call this Mailbag Monday. Real quick, the show's growing like crazy. I just want to say thank you guys. I see you guys I was walking to the gym. I'm going to the grocery store. I've been traveling, so I'm not in the empty closet. As you guys can see, I'm in a different destination because Bitcoin never sleeps. You got to grind. We got to push. The world's not going to change on its own. We got to push the world in the direction we want it to go. And I see you guys everywhere. And so often you guys give me encouragement for this show. So I just want to say I really appreciate it. Because for those of you that are new to the show, I've been in Bitcoin for 13 years. I'm the founder of 2 Bitcoin companies. I make my money that way. I support myself and my family and my necessity throughout life that way. This is for fun. This is for me to be able to contribute to the conversation and contribute to the corner of the internet that I'm most interested in. And what it's become is just a joy. So this is your all signal, no noise live stream from the CEO of 2 big Bitcoin companies and a guy that's been around for 13 years. And what we're building together is just a joy. I run into you guys on the street and you're like, man, money's our time and energy in an abstracted form. Or man, don't get worn out, don't get shaken out. Or all truth, no bullshit. It's just the coolest thing. So if you guys do ever see me, come give me a hug. What a movement. What a movement. No ads, no funny business, all truth, all signal. All right. With that, let's go. What are we waiting for? I almost forgot to read you guys the market data. I'm talking to you all at a Bitcoin price of $106,180 US dollars. That puts Bitcoin's market cap at 2.12 trillion. Our all-time high remains the same at $126,160. We made that all-time high on October 6th, 2025, almost 2 months ago. We're about 15%, a little more, away from that all-time high. So nothing too crazy. We'll talk about how everyone's freaking out in a second, but it's really nothing too bad. The block height, for those of you that are like 6 p.m. Eastern, what is that? Since Satoshi started the time chain, I only keep track of time in Bitcoin blocks. Well, the last Bitcoin block mined since I hit stream was Bitcoin block 922,112. So when our great-great-great-great-great-grandchildren are listening back to this, you're like, man, this guy was nuts. When was he recording this? It was before Bitcoin block 1 million is when I was recording it. All right, let's go. Today's episode is titled The End of the Beginning. This is a quote that I said over the last few episodes, and I've seen it quoted on Twitter, I've seen it quoted on Nostr, and so I want to emphasize it today. I fundamentally believe that in regards to Bitcoin's story, we are entering the end of the beginning, the end of the start, the end of the infancy stage and phase of Bitcoin. Very soon, I don't think you can be early to Bitcoin in a post-ETF, a post-corporate treasury adoption, a post-nation-state adoption. There are a lot of signs, in my opinion, that are pointing to the fact that this is the end of the beginning for Bitcoin and the beginning of the end for fiat currency in the existing financial system, the post-1971 US dollar, to be specific. Okay, let me, I'm in a hotel here and I see I've got messages from Dylan. All right, my internet's working okay. I was worried. I had a bunch of new messages. I was worried my internet, or I screwed something up. Not a professional podcaster, but we make it work. All right, let's go. Chapter 1, the distress is real. So I alluded to the fact that the market is down a little bit. We're 15% off our all-time highs. But the mood, the energy, the aura, the vibe in Bitcoin is off. It's down. Now, I'd referenced earlier, I've been in this game a long time. all right? I may look like a kid, and I may be a lot younger than a lot of you guys, but I've been around the block when it comes to Bitcoin, okay? This stuff doesn't worry me at all. I've seen it happen, and I mean literally, I've seen Bitcoin go down 80% from its all-time high 4 times. I've lived through that 4 times. And so this is all normal. I'll actually explain exactly what's going on in the market today on this episode. But for all these other new market participants, for all the newer Bitcoiners, for all the Wall Street folks, it feels anxious, okay? There was an awesome post written by Jordy Visser that talked about this. He referenced this as Bitcoin's IPO moment, meaning there's a lot of liquidity distribution. Bitcoin has entered the main stage. It has ETFs. It has corporate adoption. And a lot of the earlier Bitcoiners have a chance to offload and realize some profits, take some of the gains that they've made, and realize them with serious liquidity and demand backstopping it. You know, it was previously virtually impossible to sell $10 billion worth of Bitcoin in a day or in a week until recently. And we're starting to see some of that distribution happen as if it was like an Apple IPO or Amazon IPO, where after these things IPO, traditionally the market finds a top and then it declines a little bit and it stagnates around its IPO price. It doesn't just shriek through because a lot of the early investors, the early employees, they want to realize some of all this wealth they've made and get a house and get a car and pay off debt, put their kids through school. And so this is the first paragraph. I just wanted to read it to you guys. The distress is real. The sentiment in crypto, well, this is just a Bitcoin podcast. The sentiment in Bitcoin right now is frankly brutal. The S&P 500 is flirting with all-time highs. The NASDAQ has been on a tear. Gold just broke through $4,300. Tech stocks are rallying. By every traditional measure, we're in a risk-on environment. Money is flowing into risk assets. Investor appetite is healthy. And Bitcoin? Bitcoin is doing nothing. Sideways, consolidating, grinding, boring. Choose your own description. None of them hide the frustration that's permeating the community. Twitter is filled with variations of the same anxious question. Why isn't Bitcoin pumping with everything else? The cognitive dissonance is palpable. We have Bitcoin ETFs that launch successfully and see inflows every month. Institutional adoption is accelerating. The Genius Act passed and clarity is coming soon. There's no regulatory crackdown, no major hack, no fundamental narrative breakdown. Everything that was supposed to matter happened. Yet here we are, watching other assets rally while Bitcoin treads water. And even when I came to live stream, and I see a lot of you guys early on in the chat, for everyone that wasn't typing out, yo, was, what the hell, man? Enough talk. When's Bitcoin gonna moon? What the hell? This isn't what I signed up for. So this is a lot of the mood. And I went on and I captured some Whale Panda, who's been around in Bitcoin for as long as I have. His Twitter recently is just exactly that. And you know, I have nothing bad to say about him. I'm just joking. But I mean, here's a tweet. Another day, another abysmal performance. Quote, but it's only thanks to the ETFs that BTC recovered after FTX, end quote. FTX didn't have any Bitcoin on the books anymore. It was a normal bear market low, same as the other bear market. It's the bull market after introduction of ETFs that failed. Next tweet from Whale Panda. This is what mental illness looks like. This is also why this market is no longer fun to trade and why I keep saying that Bitcoin looks cooked. Next one. This genuinely makes me sad. Oh, the horror as he shows the gold price going up and Bitcoin trending sideways. Now this one from someone named Charles Edwards. For the first time in 7 months, net institutional buying has dropped below daily mine supply. Not good. You guys, Bitcoin's gonna fail. We're all gonna die. That's what it feels like when you go on the internet. It's ridiculous. Now, Jeff Park tweeted and quote tweeted Jordy's idea that this is Bitcoin's IPO moment. Meaning, guys, first of all, let me take a step back. For the price to trend sideways, that means there are as many buyers as there are sellers. If the price goes down, That means there are more people interested in selling Bitcoin than there are buying Bitcoin. When the price goes up, that means there are more people interested in buying Bitcoin than selling Bitcoin. Sometimes it's that simple. Take it from a college dropout. You don't need to have a PhD in central bank monetary policy. You didn't need to go to Harvard to learn economics. That's how markets work, okay? And so the reality of this market recently is that people have been selling. Someone has been selling. Some cohort of people that previously owned Bitcoin wanted to realize their wealth in other assets besides Bitcoin. Okay, so Jeff Park tweeted, "This is such a great read. In addition, if OG sellers are maximally profit-taking, the question is, why specifically now beyond current gains and enhanced liquidity, but also future expectations? OGs are a special group of investors. They saw something nobody saw before and took an early chance in size. This implies that the very risks these sellers are seeing may be the same rewards they once underwrote as one of the earliest cohort of buyers, which means by definition, the factors must be non-consensus, improbable, and existential." Worth thinking about this framing as well. So this is again like, what are these OG Bitcoiners seeing in the market that's terrifying them? Or why are they acting in ways that we aren't, these other people? There are people that have been around for 10 years, 15 years in Bitcoin, and they're all of a sudden selling. What's going on? Right? Because the reality is these older Bitcoiners are realizing their gains. They are the ones applying some sell pressure. Okay. I responded to this tweet and I said this: I wouldn't underestimate the value of the first Bitcoin-friendly administration in the United States. For years, Bitcoiners have been debanked, audited, and treated like criminals. Guys, I've been around that long. People classify me as an OG Bitcoiner. I can tell you what's going on. My family was harassed by the IRS during the entirety of the Biden administration. Audited, done nothing wrong, paid every tax. Not only am I not a criminal, I'm a net producer to society. I run profitable businesses. Anyone that owns Bitcoin is a net producer to society because they have excess cash that they can use to save. So as someone who's been buying Bitcoin for 13 years, I am a net producer to those around me. I run businesses. I employ people. Nothing about me is a criminal. Harassed. Me and my parents. Harassed. I, as I told you guys on this show, was thrown out of JP Morgan Chase. My father has been a private client of Chase Bank since I was born. I have therefore been a private client since I was old enough to have a bank account. One day, Chase Bank reached out to me and said, "Get out, get as far away from us as possible." And I said, "Why? I'm a client. What's happening?" "We're not allowed to tell you. Just get away." Okay. So the point is, early Bitcoiners have been harassed, treated like criminals, audited, okay? This is the first time in the history of being a Bitcoiner where it's actually encouraged. And by assigning some relationship to the asset class, by admitting that you own some of it, there isn't a threat. They're not going to try and literally bully you with different pockets of the government. So I ended the tweet by saying, for many, this is the first time it feels safe, even encouraged, to be a Bitcoiner. I think what we're seeing isn't necessarily profit-taking at a round number, but early Bitcoiners finally feeling comfortable moving some old coins, realizing some wealth, and stepping into the light. To be clear, I'm not selling a single sat. You guys know that. I've never been more bullish. I'm doing the opposite. But I'll tell you guys the truth. I've sold Bitcoin in my past, before I built Strike, before we built Strike Lending, before I'm in the position I'm in today. Hell, like people think sometimes that like I was born into, all the experiences I have now. I lived through mistakes, guys. I paid 6 Bitcoin for a painting once that was worth like $200. That my old roommate now jokes like, oh, this painting is worth like over $500,000. No, it was a couple $100 painting. I should have never spent that Bitcoin. But I just got into Bitcoin. I didn't know any better, right? The empty closet, the house I have now, how do you guys think I paid for that? Bitcoin, okay? And so the point of all of this is, me and my family, we've been in Bitcoin for a long time. You realize some of the wealth, and then all of a sudden, it attracts the IRS. It attracts getting debanked. My business has been debanked 3 to 4 times, depends on how you count, at least 3 times. I've now been debanked by like too big to fail banks that I've been a client of for 20 years. And so I really think people are being way too dramatic and they're overthinking this. And I think that the thesis, Jordy Visser's thesis that this is Bitcoin's IPO moment is absolutely correct. For the first time, early investors, just like think of Apple, early investors into Steve Jobs, early employees like Steve Wozniak, they finally get liquidity when they IPO. They finally are comfortable realizing their wealth. There isn't a stigma against them. As early employees, you're not supposed to sell. You're supposed to be all in. You're supposed to show conviction in the business. You're not supposed to trade upside for a bigger house. You're supposed to build Apple out of a garage, right? Where's the blood and sweat equity? Where are the tears? Where's the sacrifice as an early employee in some of these companies? But when you IPO, it's encouraged. Get yourself some wealth. Get yourself a house. Get yourself a car. Go get an engagement ring. And that's what, in my opinion, that's all Bitcoin is experiencing right now. You finally have someone taking the other side of this liquidity, which is BlackRock. And if you have billions of dollars worth of Bitcoin, you can finally take some of that and get a house. Let me tell you guys something. The amount of estate planning, so I'm going through it personally. My family is going through it. A lot of Bitcoiners are going through it of like, wow, what do we do now? That's happening now. And so I just wanted to touch on the vibes in the industry. I do not think that early Bitcoiners are like, oh no, Bitcoin's broken, let me sell. In fact, at least in my network, and I am one of these people, that's not happening, at all. In fact, I've never been more bullish, which I'll get to as to why, in my entire life, in my career in Bitcoin. I really think that this is the first time people are encouraged to be Bitcoiners, realize some of their wealth, and redistribute it. So you guys saw, we covered this on the show, but someone sold $9 billion worth of Bitcoin in a few days and barely moved the price, if at all. Again, guys, this would have never been possible before, ever. And I'm highly confident that this person was either realizing a portion of their Bitcoin wealth and rotating it into assets like real estate or something else that is meaningful, a form of utility. And I also don't think Bitcoiners are rotating out of Bitcoin to save in something else. I'm highly confident in that as well. But there are utility services. People like flying planes. People like riding boats. People like living in nice real estate. There's all sorts of utility. People like buying sports teams. So utility value, these are experiences. But this is the slide I really wanted to end this with. So this is, what you're seeing is in the orange-yellow line here is the price. In the green is long-term holder supply. And so what you can visually see, this chart tells a million stories. So the first one is you can see in these little dips in the green is when long-term holders are selling and realizing some of their newfound wealth. And you can see it's directly correlated to the tops of these cycles, right? So Bitcoin traditionally finds a crazy high top. So let's actually go through my story. So I got into Bitcoin with my dad here in early 2013, late 2012 range, okay? Bitcoin goes all the way up to $1,200, okay? So, mind you guys, I'm freshly dropped out of college. I'm buying Bitcoin well under $100. Bitcoin goes from, use round numbers. Bitcoin goes from $50 to $1,200, $1,300. I forget what the peak was on Mt. Gox, but call it $1,300. Okay, so you can see it right around here. Okay. Next, it goes all the way down to $250, and you can see some people realize some of that wealth in this dip. Then it goes from $250 to $20,000. And oh my God, $20,000! All of a sudden, this is life-changing money for some people, and you can see it realized in this dip. Then it goes from $3,000 it fell to $69,000, $70,000. And you can see how much was realized in this dip. Now, let me move my big ass head out of the way real quick. Hold on. Now, we have breached 100,000 and we've just been grinding. Now, do you guys see how much has been realized by OGs and the price isn't dipping? The price isn't dipping. So a few thoughts, guys. The way Bitcoin is distributed. So people say Bitcoin is distributed through mining, which is true. Proof of work. Ingenious invention by Satoshi. But Bitcoin is also distributed by people selling. You understand? Like, the way I like to visualize Bitcoin's evolution in being fairly distributed is there's a lot of people in this world that have a lot of big houses, a lot of private jets, a lot of gold, a lot of equities, right? Like, think about Mark Zuckerberg. Mark Zuckerberg has a lot of big houses, a lot of stock in Facebook, a lot of private planes, a lot of cool boats, a lot of stuff that required time and energy for him to acquire, right? Now, what does he not have? Bitcoin. And think of an OG Bitcoiner. An OG Bitcoiner who was maybe, let's use the stereotype, which, is sometimes unfair, but let's use a stereotype. An OG Bitcoiner that was in a college dorm room or their parents' basement that had fuck all, but was mining early. Okay. They have a ton of Bitcoin, billions of dollars, tens of billions of dollars of Bitcoin, but they don't have really nice houses, private planes, a ton of equity in companies that they're running or have founded. And so there's a natural exchange. Eventually, OG Bitcoiners are going to turn some of their Bitcoin wealth into real utility assets, like houses, like boats, like planes. And eventually, all the people that have all of these monetized assets that aren't actually money, that they're using to save, they will demonetize those assets, so they'll sell the houses they don't actually live in. They'll sell the Facebook stock that they're not actually saving in. They'll sell the gold that they're not actually using as money, and they'll monetize Bitcoin. And so it's a very natural swap. And so what you guys see in this chart is this is what we call an adoption curve. So Bitcoin goes up, it attracts new entrants. Those new entrants need supply. The supply doesn't come out of the ground because we can't get Bitcoin out of the ground. We can't get Bitcoin out of the factory. We can't get Bitcoin at the Federal Reserve. It comes out of the market, guys. It comes out of the hands of people like you and I. And these people, like, guys, I'm not going to point out where in the chart I got my empty closet house, but that's my story too. At a certain point in my life, I was like, man, I want a cool house. Now, should I have waited until Strike launched Strike Lending and borrowed and financed it that way instead of the way I did? Yeah, but I was young and whatever. Oops. Whatever. But the point is, I don't even really regret it. It's a beautiful place. My girlfriend and I have tons of memories there. It's very likely going to be the home that we, are going to be living in when we get married and have children initially. So I don't regret it. I traded in some of my newfound wealth for a utility asset that's provided me safety, memories, and a place to start a family. And that's all right, this rant is getting a little long, but that's all I literally think that's all that's happening. And the mere fact that Bitcoin remains above 100K during all of this realized selling is absolutely insane. I cannot begin to express how bullish this is. Look at every other time wealth from old Bitcoin holders was realized. It was a bear market. This goes to show you guys the amount of institutional demand, the amount of maturity that Bitcoin has as an asset class is absolutely insane. It's absolutely insane. So I'm just turning on a lamp here. It's getting a little dark where I'm at. There we go. So anyways, I know it feels grim. I know it feels bleak, especially for those of you that are new. I've been through it. I've been around the block. This contextualizes it. The reality is this is how Bitcoin gets adopted. Bitcoin's initially distributed through mining, but then it's further distributed through people exchanging Bitcoins for real-world utility assets. And people that have real-world utility assets need Bitcoin. And there's going to be a natural distribution mechanism over time. Okay. Now, let me go on to why I am so bullish right now. Because all that's happening in the current financial markets and all of the selling and realized profits, because again, if you get a US president that's saying, I'm supporting you being a Bitcoiner, I'm going to get, what do you say, the Elizabeth Warren regime off your back. And I know these things are funny and like I said, I'm not necessarily a Trump guy. I'm not necessarily a Democrat guy. I'm an orange guy. I've told you guys this. I don't align with any particular political agenda. Not my thing. I actually don't think politics are the best way to change the world. I think open source software and technology is, obviously. But when you have a president that actually means that and says that, it's very encouraging to people that initially thought they were like criminals, or if they deposited a lump sum of their Bitcoin on an exchange, they were going to get harassed or kicked out of banks or treated differently or threatened physically. Like all of that was true. So anyway, all right, I'll stop. But the fear mongering of like, oh, Bitcoin OGs know something we don't, and like Bitcoin's going to die, it's outrageous. And the fact that we're still above 100K while early Bitcoiners get to realize some of their wealth, exchange it for utility assets, and you're allowing folks from the traditional system that didn't have any Bitcoin but had a bunch of other stuff, like the BlackRocks of the world, the Fidelities of the world, public companies, they're now building Bitcoin positions. We're distributing and maturing this asset class all above 100K. It's insane. And now liquidity trap and the end of QT. Now, we're doing all of this while the current financial system is officially starting to break, which let's get into now. So this tweet from James Lavish. Good morning. After a month of increasing usage, overnight borrowing, which is the need for dollars, exploded on Friday to $50 billion, mostly in the afternoon session and not posted by the Fed, but captured on Bloomberg. This need caused SOFR borrowing rate to explode to 35 basis points above the Fed funds rate. While some increased activity is expected at the month's end, these are serious red flags that the financial system is on the verge of locking up unless the Fed adds liquidity soon. Have a great week. Now, I know that sounds like a bunch of jargon, so why you guys tune into this show is I'm going to explain it to you and why this is so incredibly bullish for Bitcoin. All of this is like so exciting to me. So you can see in this image here, the standing overnight repo facility, so the SOFR, it spiked. You can see here the rate. Okay, so let's get into what's all going on. So this tweet from Lynn, all the QE, QT, SOFR/repo stuff that's happening right now is basically just like back in 2019, except now the Fed has a standing repo facility. Both times, a rapid TGA refill was a big catalyst. I have an explainer thread in 2019, the repo spike below, from back when it was happening. So first of all, let's take a step back. Let me try and break this down for you guys. The reverse repo. So you're going to see people on the internet saying, the reverse repo's empty, the reverse repo's empty, this is crazy bullish, the system is breaking, the Fed has to start printing money. What is the reverse repo? In plain speak, to keep it short, the reverse repo was created after the 2008 financial crisis when the Fed printed so much goddamn money that banks didn't actually know what to do with all the bank reserves that they had. Because think about it. The United States, whether you think the Fed is independent or not, just call it the United States of America, creates a bunch of dollars, right? Those dollars end up as deposits in the banking system, because whether those dollars are stimulus checks like we saw in COVID directly to the people, or whether they're distributed in an entirely different way, they end up realizing themselves in the economy and people deposit them in their bank. They buy stocks, they buy gold, they buy houses, now they buy Bitcoin, right? Now there was so much excess dollars at the banks that the funding rates were dropping below the Fed funds rate. And the Fed needed to set a floor of the cost to borrow. And so they created this thing called the reverse repo, where money market funds, government funds, domestic banks can deposit into the reverse repo and lend to the Fed. And that is risk-free. So if the overnight rates fell below the Fed rate, everyone just go to the reverse repo, okay? So think of it as a liquidity sponge, a place to take all the excess sloshing printed pieces of paper and park them to get a risk-free return and creating a floor for rates. Hopefully that makes sense. You guys can ask questions at the end. But it's a sponge for liquidity because the Fed printed too much money. So it's going to attract a bunch of dollars. Okay. Now, what you can see on this chart here is on the far left in 2021, this spiked. Why did it spike? Well, do you guys remember what happened in 2020, 2021? COVID. We're printing trillion plus dollars. And so the same thing happened as 2008 financial crisis. So much money was printed that the banks had a ton of reserves, so much reserves that they didn't know what to do with. There's so much bank deposits because everyone was getting stimulus checks. Money was coming from left, right, center, up, down, right? And so you can see a lot of that liquidity, again, this is like a liquidity sponge, ended up in this reverse repo. Now, Janet Yellen, so the former Treasury Secretary, so, last administration's version of Scott Bessent, Scotty B, she was trying to engineer a way to inject some liquidity into the financial system back in this 2022, 2023 range. So you see where this thing tops out here, so you can see it explode during COVID. So much liquidity printed, so much money printing, which we all lived through. And then it starts to stagnate and then dip down. It dips down because what Janet Yellen realized is if she issued T-bills, so lending to the government short term, short duration, and she made the T-bills more attractive than the rate you were getting in the reverse repo, she could drain money out of the reverse repo and into lending to the government. It was very tricky and sneaky on her part. But when you hear someone say there's $2.4 trillion in the reverse repo, that's private cash that was parked there, excess liquidity, excess reserves that was parked into this reverse repo. So it's like a liquidity sponge, okay? And then one of the reasons that you had the rates hike as fast as they did, and you had U.S. rates, so the Fed had rates at over 4%, and Bitcoin went from 17K to 100K. Guys, rates are still extremely high in the United States. We've talked about on this show how the United States has some of the highest rates from any central bank, or the dollar, the Fed, again. Are they independent or are they not? Whatever, interchangeably. The Fed has some of the highest rates in the world, and Bitcoin's been bullish. It's almost 10x'd in that time period. How is that possible? Where's the dollar liquidity coming from? You're draining money out of vehicles like the reverse repo. And so what Janet Yellen did is, hey, I'll issue T-bills. And so if you're a money market fund, you don't have a bias on where you're getting your risk-free return. You just want the highest number. And so when the Treasury is giving you a slightly higher number than what you're getting at the Fed, then they're draining money out of this. And so you can see the deposits leak, but now it's empty. And the emptiness is very important because it's really a proxy for how much liquidity is there in the system, right? Janet Yellen needed to find a way to support the existing financial system. And she did it by using this reverse repo facility, draining over $2 trillion that was acted as a sponge for when all the printing was happening. She drained it all out and was able to puke it into the real world. But now it's gone, okay? So first let's start there. That's what the reverse repo is. And when people say, well, the reverse repo is empty, this is a huge deal. That's what they mean. It is a huge deal because the hack that the US government was using to give liquidity to the existing financial system without bringing rates down. So you needed high rates because you want to fight inflation, but the existing financial system needs liquidity or else it collapses. It's a giant stack of cards, of dominoes. It's going to fall apart. And so that is what happened. Now, this is from Jerome Powell's recent meeting. This is from the Fed's website. And I quote, "While reserves appear to remain abundant, they are declining and will continue to do so. Since we began shrinking our balance sheet in 2022, this is known as QT, quantitative tightening, the quantity of reserves has not changed much as the excess liquidity in the system was absorbed and then subsequently released by our overnight reverse repo facility." Okay, you guys following so far? That's the reverse repo facility we just talked about. Now, however, balances in that facility have declined to minimum levels. He's acknowledging that it's gone. So further declines in our securities holdings will translate more directly into lower reserves. So what he's saying is, we began quantitative tightening. We began reducing our balance sheet. So you have COVID, then you get crazy amounts of inflation because they printed so much money. And so what the Fed is saying is we have to protect the American consumer's right to fair pricing. Now, again, as a free market guy, this is absurd. We should abolish the Fed, but just allow me to cosplay as Jerome Powell. We need to defeat inflation, so we're going to hike rates as fast as we've ever hiked them, and we're going to reduce our balance sheet, so quantitative tightening. We're going to tighten, like almost like artificially make the dollar scarcer. Think of it that way as a Bitcoiner. Now, what he's admitting to is the reverse repo facility that was useful to the market getting liquidity and making sure it had ample reserves is now empty. And so he's saying, now, if we keep reducing our balance sheet, we're starting to crush the reserves in the financial system. And we might squeeze it to a point where there aren't enough reserves and the whole thing seizes up, which is what Lynn Alden referenced in 2019. And so does Jerome here, so I'll keep going. Now, however, balances in that facility have declined to minimal levels, so further declines in our securities holdings will translate more directly into lower reserves. Currently, reserve balances stand just below $3 trillion, or about 10% of GDP. By comparison, reserves as a share of GDP stood near 8% of GDP in early 2019, prior to the acute funding pressures that emerged later that year. So what he's referencing is what Lynn referenced. In 2019, this exact same thing happened. Now, not like exact to the pixel, but the same exact flavor. Different facilities, but same thing. There wasn't enough reserves in the existing financial system. And the important metric here is that it was about 8% of GDP, the amount of bank reserves in the system versus the GDP. Right now, we're at like 9 and some change. And when you see these charts shooting up and to the right, it's screaming red flag. It's screaming mayday, mayday, SOS, SOS. There's not enough reserves. There's not enough liquidity. Things are getting tight. And when you look at the data and you listen to what Jerome Powell is saying, he's admitting that it's happening again. Now, what was the reaction to 2019? We all saw it. Now, it was described as COVID. Now, conspiracy theorists will tell you that COVID was engineered so that they could print a lot of money. I'm not going to be that guy. No matter if it was left, right, up, down, the point is they had to print a lot of money, whether COVID happened or not. Okay? And so the reaction to this is an insane amount of money printing. The Fed has no choice. And so he writes, note that reserves as a share of GDP is merely indicative. So he's saying, don't freak out. It's just indicative. It could potentially be useful. Get out of here. Not a measure of the ampleness of reserves. Assessments of where reserves stand relative to ample levels depend on a wide range of indicators. So he's saying, this is Jerome's last meeting, guys. I'm reading direct quote. It's from the Fed's website. He's saying, hey guys, remember when the entire market seized up and stopped working in 2019 and we had to quickly now whether it's QE or not, you know, there's pointless debates on the internet of what's QE. No, all the purists are saying that's not technically QE. I don't give a shit. It's money printing. It's debasing the dollar. It's a scam. Whatever variation of what happened in 2019 and what's about to happen now. In 2019, the market seized up. There weren't enough reserves. The Fed had no choice. They had to just go dump tons of liquidity into the system to provide ample reserves. Okay? This is the cost of borrowing tens of trillions of dollars over the last 20 to 40 years and doing fuck all with it, losing it, wasting it. There's money missing. The reserves aren't there. In order to perpetuate this, they have to print the money. And the chairman of the Federal Reserve is sitting here telling you in broad daylight, remember what happened in 2019? It's happening again right now. And so I'm going to pause QT and end it. I'm going to start QE or some variation of it where I'm not going to call it QE because everyone in the world already knows what QE. Everyone knows QE is money printing. So I won't call it QE. We'll make some other facility. The Bank Term Funding Program, the repo rate facility, all this garbage bullshit. It's money printing at the end of the day. As a Bitcoiner, that's all we care about. That's all we care about. Bitcoin's the best expression of this mess. Okay, so I go on. So when you guys see headlines like this, Jerome Powell, there's not a lot to benefit more from balance sheet runoff. So he's saying, and Zero Hedge jokingly remarks, translation, we all remember September of 2019. So Jerome Powell's saying, hey, now that I think about it, there's not much more to gain from QT, from tightening, from balance sheet runoff. We should stop that, shouldn't we? And then he says, Fed's Powell, at some point, we will want reserves to begin growing gradually. Guys, listen to me closely. Bitcoin is absorbing record levels of OG selling and remaining above 100K. This asset is maturing. People are able to realize wealth creation and new entrants, Fidelity, BlackRock, large sovereigns, governments, institutions. We're still above 100K. We're still one of the best performing assets this year. And the chairman of the Fed is telling you the market is about to seize up. Our facilities that we've used to inject liquidity are empty. Funding rates are screaming mayday. We need to stop QT and start printing money. They're saying it in broad daylight. This is from Fed trader Joseph Wang. The Fed sets interest rates as it sees fit, but it is losing control of its balance sheet policy to the growing fiscal deficit. Fed officials look to repo rates for signs of reserve scarcity, which influences their decision to shrink or expand their balance sheet. But repo rates are determined by supply and demand, and not simply the level of reserves. Demand for repo financing continues to grow rapidly from the increasing fiscal deficit, while the supply of repo financing can only keep up with the help of the Fed. Okay? So it's saying the demand for these things is so high because the government runs such a large deficit, because we have so much debt, because we're living in fiscal dominance. But the supply to meet that demand can only grow if the Fed prints the money, guys. That's how it's always worked. I am so bullish because despite the financial system having no liquidity, so you guys keep asking me, why is Bitcoin dumping on a Sunday night? Why is Bitcoin dumping on a Friday? Because when these lending rates spike, Bitcoin is telling you the truth. It's telling you there's something wrong. Bitcoin is the best. It's a truth machine. It's the only free market we have. So on a Sunday night, when banks are having a tough time finding overnight rates and there's no reserves in the system, Bitcoin is the thing that's telling you, no, bad, help. And on the contrary, when the Fed, which they're starting that process, we'll see how quick they go from, it might be a good idea to stop QT and start QE, to print. Bitcoin's going to run the fastest. I'm telling you. I will get on here and raise my hand and say, I was wrong if that doesn't happen. But that's why I'm so bullish. Despite, guys, 4 years ago, if Bitcoin was experiencing this market, Bitcoin would have dropped 30, 40, 50%. The level of institutional buy, the fact that we're above 100K, absorbing what we're absorbing, is insane. It is amazing. So Joseph continues, stable repo rates would ultimately require persistent Fed balance sheet expansion and effectively control of its balance sheet size to the fiscal authorities. This post reviews the supply and demand factors that have driven repo rates above interest on reserves and suggests that balance sheet expansion will resume shortly after QT. Okay. and this was the end of it. I just want to read to you guys this part as well. A steady expansion of the Fed's balance sheet is the most likely way to meet the growing financing demands of the Treasury, which is just the U.S. government. The Fed could do this through its standing repo facility, where it lends according to the needs of repo borrowers. The facility has so far seen limited take-up and does not appear to constrain repo rates. They could also buy Treasury bills to add reserves into the banking system, who could then lend them into the repo market. It is also possible that commercial banks could increase their lending in repo by expanding their balance sheet and not just shifting the composition of their assets. But that is not likely under current regulations and spreads. The end of QT is coming soon, and further growth in the Fed's balance sheet will necessarily follow shortly. I could not agree more. He tweeted this: the Fed will need to expand its balance sheet by several $100 billion a year. And that is true because the demand for the debt that's required. So, call it $1 trillion a year. So he writes, the end of QT may start in December to head off year funding pressures, structurally rising TGA, and insatiable demand for repo financing leave them little no choice. So the Fed doesn't have a choice. You're starting to hear it from Jerome Powell. It's in the data. It's in the numbers. This is from the Fed's Logan. If recent rise in repo rates turns out not to be temporary, clearly not, Fed would need to begin buying assets. And then he said, supported decision to end Fed balance sheet runoff. So we're all on board. No more QT. Get the money printers humming. Get them warmed up. Now, I just want to, one more kind of funny insight here. So Lynn referenced this, Joseph referenced this. There's been a few references to the TGA and the TGA growth. So the TGA stands for the Treasury General's Account, okay? And now you guys, you can, there's Q&A at the end of these episodes. So you guys ask me if I lose you at any point. The Treasury General's Account, think of it like the United States government's checking account, okay? It's the account that Scott Bessent, the Treasury Secretary, finances the U.S. government on, okay? Basically, all of the fancy finance talking heads are going to be in the comments like, bro, what? Listen, I'm trying to dumb it down, all right? Think of it like the U.S. government's bank account. Now, with this chart is showing the growth in the U.S. government's bank account, okay? Our bank account in the U.S. government just crossed $1 trillion. Now, the reason this is important is as the TGA grows, so they're saying, a lot of the reserve scarcity has coincided with the TGA's growth, with the U.S. government bank account's growth in balance. The reason for that, obviously, is Scott Bessent and the U.S. government can impact dollar liquidity. If there was not ample reserves and they wanted more liquidity into the system, one way they could do that is spend down the TGA. The U.S. government can start spending money into the real world. Okay? So what you're seeing here, this chart reads, first red arrow down in 2021, the USD weakens. So next, read this tweet. The irony is that part of the reason for the funding strain in the economy, which we're talking about, the funding strain in the reserve system, is that the federal government remains closed. And so the Treasury's general account is running about $150 billion above normal, which has pulled reserves from the system and driven up funding costs. If I was a conspiracy theorist, I would say part of the reason for the government shutdown is to withhold this cash from the banks, because a funding squeeze puts the Fed back into QE mode as quick as possible. This was fascinating to me. So what this tweet is potentially implying, obviously there's a little conspiracy here, but the fact that the government is still shut down means that Bessent can't spend this money, can't give the banks the liquidity they need. And if the banks are starved of liquidity and the rates are becoming an issue, then Jerome Powell has no choice than to turn QT around and start printing money. And that's been the goal of the Trump administration this entire time. We've talked about it on this show. There's clearly politics involved, right? Powell is and the Fed at large has become a political organization. There's no doubt about that. And so one way that the Trump administration and Bessent can get the Fed on side is by remaining shut down. So people are like, why is this shutdown lasting so long? Now, I don't know the answer. You ask the Republicans, they say it's the Democrats. You ask the Democrats, they say it's the Republicans. But one hilarious byproduct, whether it's on purpose or not, it's a fact, is that the TGA is running way above normal, which dries up liquidity, which causes these rates to spike, which forces the Fed to print. And so I bring you back to this, guys. Long-term Bitcoin holders have sold more than 400,000 Bitcoin over the last 30 days, representing almost 2% of the total supply. Bitcoin is in a material supply distribution phase, and the price is still holding above 100,000. Bitcoin is living through a liquidity strain in the banking reserve system of the current financial system, and it's still above 100,000. Bitcoin has lived through QT for years, the fastest rate hike ever, and now, just now, only just now, is the financial system starting to break? Is there starting to be serious strain? Is the Fed forced to having to print money? And people are going to look at me and say, oh, the cycle's over. We've already experienced the top. I don't know why you're bullish. Listen, I don't give a fuck about 4-year cycle. Oh, we're this many days from the halving. I don't care. That's not how I'm bullish. Sue me. And I'll tell you this, if Bitcoin doesn't have an explosive 2026, I'll come on here and be like, yo, I screwed up. I was wrong, and here's how and why. As far as I can tell, this is the most bullish setup ever. We're just chilling above 100K, facing max sell and distribution of capital into extremely deep-pocketed institutions. This is an extremely liquid and mature market. Someone offloaded $9 billion in a day and it didn't move? It's insane. How many assets in the world can do that? And the entire financial system is seizing up as the government shuts down. So riddle me this, guys. The Fed stops QT, they start some variation of QE, the government comes back on, and the $1 trillion in our checking account starts to pour into the real world. The Fed starts printing money. Powell has to leave. Trump appoints who he wants, and they start slashing rates 50 basis points at a time. And I'm supposed to be bearish? Nah, you got the wrong guy. I've never been more bullish than now. I know, I get it. Like, oh yeah, of course you said that. All right, well, the coolest thing about a free market is time will tell. Time will tell. I'm bullish. All right, let's go over some trade war stuff and some AI stuff before we wrap this bad boy up. What China did to Red America, the internet is doing to Blue America. I'm going to keep cementing this idea on this show. Listen, China disrupted Red America. Red America being the middle of America. Red America being manufacturing base of America, right? The Rust Belt. It's rusty because no one's manufacturing anymore. All of those jobs are in China. The reason that Apple doesn't produce the iPhone in Manhattan is because it would be far more expensive to do that than to produce it in China. China has cheaper labor, a weaker currency, and a stronger manufacturing base. These were all policy decisions made over the last 50 years. This is the post-$71. We print money, we export the dollars, we do fuck all, and the rest of the world bootstraps their manufacturing base and other natural commodities, basically because we decided to be the world reserve currency, backed by nothing, and just print paper out of thin air. Okay? Now, what China did to Red America, which is entirely disrupt the middle of America, all the wealth concentration lives on the coast now. You're either tech and venture capital and whatever in California, and there's a lot of wealth there, or you are New York, Wall Street, financial markets, hyper-financialization, and there's a lot of wealth there. The wealth in the middle of America is gone. You know, you can make the argument that this is why Trump won the popular vote. He won the popular vote while not winning the coasts where majority of the population is. He won it in the middle of America because the middle of America is pissed off. They don't have any jobs anymore. There's no manual labor opportunity anymore. You either have to be a Stanford engineer that drops out and creates Facebook, or you have to be a Harvard educated economist, financial dude that, works his way up Wall Street in like a really pathetic and soulless way. Okay. Now, what China did to Red America, the internet is doing to Blue America. So Red America's main enemy is China. Trump's going to establish these trade wars. He's going to blame everything on China. He got on 60 Minutes yesterday and he said, I want to be number one in Bitcoin because China is trying to be number one in Bitcoin. I don't even think that's true. Who knows if it is or not, but everything's China's fault. Trump's going to make tariff deals with China, trade wars with China. He's going to bring manufacturing back. He's going to bring back the middle of America. Now think the same for the internet. So the internet is disrupting Blue America. So what's Blue America? Blue America is modern day media. Blue America is Wall Street. Blue America is accountants, lawyers, highly educated. Really the divide is, do you have a university degree? Because how's the internet disrupting Blue America? The internet is disrupting Blue America because AI is taking the entry-level jobs of the accountant, of the lawyer, okay? And I'll show you guys the data in a second. Entry-level jobs for university-educated kids or young adults is dropping off a cliff. Okay, the internet is also disrupting modern-day media. So the Wall Street Journal, the New York Times, the Washington Post, they hate the internet. There's been a war against Elon Musk, Mark Zuckerberg, Google, Jeff Bezos. There's a war against the internet because the internet is disrupting legacy media, okay? And then Bitcoin is disrupting Wall Street. There was a war from the Biden administration on Bitcoiners, on people like me, kicking me out of banks, harassing me with agencies like the IRS. A war because I've outperformed, and I don't say I in an egotistical way, we all, assuming you guys are saving in Bitcoin too, we've all outperformed everyone on Wall Street just by saving in Bitcoin. Bitcoin is disrupting all these fancy hedge funds. Oh, Ken Griffin's hedge fund had an 18% return because he's smarter and richer. And no, fuck you. I've had a 50% CAGR sitting in an empty closet looking like a 12-year-old. Disrupted. Boom. Goodbye. You're irrelevant. Nobody needs to understand your high frequency trade, beta, alpha, mega, fucking hedge fund strategy that's returning a little bit more than the S&P 500. Just crushed your performance by just owning Bitcoin. And so that's the battle here, and you guys need to understand that. So the internet, or the Blue America's main enemy is the internet. They're going to go battle against AI. They're going to battle against, social media that's disrupting traditional media, and they're going to battle against Bitcoin. And so let's check in on that battle. Tens of thousands of white-collar jobs are disappearing as AI starts to bite. This is from the Wall Street Journal. Layoffs at companies ranging from Amazon to Target are sending young and experienced workers alike into an unwelcoming market. Now from Reuters, AI sets up Kodak moment for global consultants. Remember what happened to Kodak? Not good. Again from Reuters, Foxconn to deploy humanoid robots at Houston AI server plant. Check out this graph, guys. So I know a lot of you that I run into, you guys listen on the podcast apps. You actually listen at the gym, which I can't imagine bench pressing while I'm just shrieking in your ear. That's outrageous. But I'll try and vocalize the charts we're looking at so you can understand. So on the left, it's a chart of junior employees. And what we're seeing is month after ChatGPT 3.5 was released, you're seeing these junior employees decline pretty sharply, okay? Actually very sharply. And so junior employees were growing along with senior employees up until AI started to mature. And now junior employees are dropping off a cliff. And you're seeing folks like Amazon, Target, they're laying off tens of thousands of employees at a time. Now, conversely, senior employees are actually growing at an exponential rate. And this in lies kind of what we've been talking about on the show is that there's really two versions of America. Either you're an asset holder, you're educated, and you're a senior employee where there's tons of opportunity to utilize AI and build equity capital, to use excess cash reserves or for-profit businesses and acquire Bitcoin. we're living through asset inflation because the dollar has never been debased harder, right? And it's about to get even worse, as we just explained in the prior chapter here on the show. And so this, to me, is staggering. And again, it fuels this civilization divide that I'll talk about next, which is you have young people that are disgruntled, disenfranchised, that feel like they've gotten robbed. They grew up through unprecedented levels of fiat debasement. They've accrued unprecedented levels of debt. Household debt or individual debt are at record highs. Credit card debt. You need debt to own a car. You need debt to own a house. You need debt to go get an education nowadays. And now they're entering the workforce to finally realize all that hard work and sacrifice, and some AI is taking their job. And you guys want to know why Mamdani is going to get elected in New York? Guys, Mamdani is the tip of the iceberg if this persists. Because you have all these disenfranchised, pissed off, younger, youthful generation, but they're not dumb. These are college-educated people that are capable and smart. They feel like they've been misled. They feel like they've been lied to. And they're saying, you know what? Fuck this. Go take Elon's money and distribute it to all of us because we got scammed. And the problem with all of this is they're not wrong. But Elon's not wrong either. That's a violation of property rights. What's mine isn't yours. There's no way the world can work with price fixing and government-run grocery stores. That's outrageous. The truth is, they're both wrong and they're both right. The problem is the money, okay? The problem is the money. Now, if we go, this is manufacturing employment, okay? And so this is not, just look at the bottom axis here. So for those listening, on the far left, we're talking about 1970s, and on the far right is current day. And you see around 2000, this dropped off a cliff, manufacturing employment in the United States. It dropped off a cliff because this was China disrupting Red America. This is the result of the post-71 dollar. If we say, we want to be the world reserve currency, which gives artificial strength to the dollar, which means local labor is going to be way too expensive, right? Assets in this country are going to be way too expensive. Oh, you want to be able to live in the United States of America and get paid in US dollars? Well, manufacturing the iPhone or manufacturing the Ford truck or manufacturing a Tesla, anything, it's too expensive here. It gets offshored to China. So we just print a bunch of money, we ship it to China, and in return we get real stuff. We get our iPhones, we get our cars, we get our chips, we get our rare earths. And so you see that the middle of America, or just the manufacturing base in America, the manual labor, the non-college educated workforce got eviscerated, destroyed. We had to print a lot of money for this, by the way, because all these people, they have mortgages, they have car loans, they have credit cards. Just because you got disintermediated by China or by the internet doesn't mean you just get to sit on your couch all day, suck your thumb, and eat ice cream. These are human beings. You guys want UBI? Print the money. You want to make sure they don't default on all of their loans that Chase Bank and Bank of America and all these banks have given to them? Print the money, right? So this is what's happening to Blue America now. This same chart. You guys want to see how aggressive something can happen? I expect in the 2020s will be the 2000s. So what happened in the 2000s for Red America will happen to Blue America in the 2020s. Employment will drop off a cliff. Oh, cool. You're an engineer. You spent 4 years at Stanford learning to code. Guess what? That's worth zero because an AI can code better than you. Oh, cool. You spent 4 years learning how to do everyone else's taxes as an accountant. Guess what? No one cares. Oh, cool. You want to be an entry-level lawyer? Unless you're a senior partner? Nope, doesn't matter. Unemployed. Oh, cool. You're a journalist? No one cares, and no one believes you anyway. No one trusts legacy media. We all go to Twitter. Oh, cool. You're a Wall Street hedge fund bro? You can't outperform Bitcoin. Doesn't matter. We're all just going to stack sats and stay humble. Now, if we go look at this one, the tweet reads, less than 1/5 of the US population lives in parts of the country experiencing economic expansion right now. I'm going to read that again. Less than 1/5 of the United States population lives in parts of the country experiencing economic expansion. So when we say, are we in a recession? Are we not? Are we in a recession? Are we not? And I say, guys, there's two Americas. It depends which America you're talking about. Sure, there's parts of America that are booming. How many people actually live and are experiencing that? Not a lot. So why is society so frustrated? Why are we seeing rising record levels of violence? Why are we seeing a level of socialism being adopted in a city like New York? Because almost all of the people are getting fucked. Sorry, just being blunt. You come to this podcast for the truth. I'm not going to massage it to you. Right? So now this leads me into a civilization is only as sound as the money that it's built on. We've talked about this. Last week I said, if it's fix the money, fix the world, what's the opposite of that? A broken money forms a broken society. So what are the costs that we have to bear from all this money printing, the post-$71, fiat, the division of society? It creates hatred, anger, angst, violence. This is from the Wall Street Journal. The Pentagon orders National Guard to establish quick reaction forces for civil unrest and riots. The move comes after Trump ordered expansion of military units for responding to domestic disorder. Guys, the Pentagon and the President of the United States is asking for more military resources for inside the country. The Pentagon has ordered the National Guard to create, quote, quick reaction, end quote, forces in every state and territory by January. This is a Q4 effort of the U.S. No, our military is not focused on Ukraine. It's not focused on the Middle East. It's not focused on Venezuela. No, it's focused on us. Do you need more of an example of the level of societal breakdown and civil unrest we're living through? Unprecedented levels. The riot controls units are a major shift for the Pentagon, underscoring the Trump administration's push to directly involve the military in responding to protests and other domestic missions that have been off limits except in emergencies. As many as 500 soldiers in each state or territory National Guard organization will be assigned to deploy in the U.S. on short notice and receive non-lethal training in crowd control, handling of detainees, and use of batons, stun guns, and body shields, according to the Pentagon. I've shown this graphic on here before. I showed it actually right after the Charlie Kirk assassination. I'm going to show it again. This is the incident of assassinations data. We have not seen this many assassinations since the mid-1800s. Do you guys know what happened in the mid-1800s? The Civil War. So let's contextualize all of this. You have the middle of America that is disenfranchised, pissed, furious, violent, because they've been disrupted by China. Their manufacturing jobs, their manual labor jobs were exported to benefit Washington, D.C., to benefit Wall Street, to benefit Palo Alto and Silicon Valley. Make no mistake about it. Printing money and the U.S. dollar's current system was highly beneficial to those areas of America, and it extracted the wealth from the middle. And those were policy decisions. This is no one's fault but those that made these choices. And now you have Blue America that's becoming equally as disenfranchised, frustrated, and violent. Their jobs are being taken by Elon Musk. You let Mamdani tell it. That guy he's rich for no reason. He got lucky. He doesn't deserve all that property. You've got AI disrupting the accountants, the lawyers, the engineers. You've got Bitcoiners taking down Wall Street. Jamie Dimon tried to ban me from the media. This guy, this college dropout, the guy in the empty closet, I'm such a threat? No way. So what does that result in? A broken society, violence, assassinations. Is it going to get to a civil war? I hope not. But understand what's happening. The daughters of today's world are resulting to OnlyFans to finance their life. It is no longer part of the American dream to be a young woman, go get an education, be inspired by some craft, get married, have children. You turn 18, you sign up for OnlyFans, and you sell adult content, pictures, and videos of your body for subscriptions. That's the fiat world we've created. Assassinations that are rivaling the times of the Civil War. The Pentagon and the military increasing resources to look internally at our own country, at our own people. Less than 20% of this country is experiencing economic growth. Over 80% of this country is getting screwed, is feeling pain. The reason we do this show on here is because Bitcoin is the only equitable solution for all of us. The question is, what do we do? Fiat caused this problem, so the opposite of fiat is the solution. That's what Bitcoin is, the opposite of fiat. Snap runs out of money on November 1st. So these like EBT cards for, those that are financially supported by the government, and this comes from Chicago. So again, Chicago's becoming a really tough sell. You guys think these people are going to be pissed? You think this might incite a little bit of violence? You think these people are going to look at others to blame? Riot? Protest? They can't get groceries. Now, should they be financed by the government in the first place? No. But again, look at what fiat has caused. This is what we're solving. When people say, yo, calm down, man, don't be so passionate about Bitcoin. I literally think Bitcoin is solving over half the world's hardest problems. If we live on a Bitcoin standard, we solve all of the things I'm talking about. All right, lastly, an update on the trade war. It seems to be what this administration wants everyone to focus on, but I also want to just pull up, I want to reference where we started versus where we are now. You'll laugh. Okay, so these are recent articles over the last week. China's industrial profits surged to 21.6% in September, the biggest jump in nearly 2 years. Wow. Doesn't sound like they're experiencing tons of pain, does it? From the Wall Street Journal, China's exports rise at fastest pace in 6 months, despite the U.S. tariffs. That's weird. Let the administration and everyone in the government tell it. We're sticking it to them. They're screwed. Doesn't seem like they're screwed, does it? Next, China, manufacturing PMI contracts for the 7th straight month in October. None of this screams they're screwed. None of this screams they don't have leverage. None of this screams they're panicking. Interesting, right? From the Financial Times, external renminbi loans, deposits, and bond investments by Chinese banks quadrupled to more than 3.4 trillion over the past 5 years as Beijing steps up efforts to expand the currency's role in global finance and reduce its exposure to the dollar. And so we've talked about this all the time. One of the biggest weapons for the U.S. is financial sanctions. If you have the world reserve currency, everyone prices things in dollars. It's the financial rail, so it's how you transact, it's how you trade. And so if you are a Russia, a China, a Brazil, an India, like the BRICS nations, anybody, look what happened to Russia. Look what has happened to other parts of the world. Cuba. Sanctions are a threat to a country's stability. And so China and all these countries have been de-dollarizing and using gold. They've been remonetizing gold to de-dollarize. Okay? This is from the FT article. You can see the growth in the renminbi. So look at the red there. So you can see the dollar start to decline. Look at 2021. Decline. That's what happened in 2021. You guys remember the sanctions against Russia? Look at the growth in red. Interesting, right? Now, this is all along the theme of I think we're being sold that the U.S. has all this leverage and that we got China right where we want them when we don't. I think we're sold a fake narrative. I think we're sold bullshit. And I'm not a China stan. I'm not a China supporter. I'm an American. I'm not leaving. I'm fighting for what I think this country stands for. And I think the internet and Bitcoin and AI is the best chance we have to fulfill the prophecy that is the West. So do not even try me with that like, oh, you love China bullshit. I'm just trying to give you guys the facts. The best way to make decisions is to operate from the truth. Okay, now China is now taking the lead in AI. So what this graphic shows is who makes the open model of choice. The blue is the US, the red is China, and the orange is the EU, which is practically irrelevant. And you can see somewhere over the summer or early fall, so very recently, China has flipped the US. And you can see in the bar chart just how prominent China is in AI. This was from Chamath Palihapitiya on the All In podcast recently, where he said, we redirected a ton of our workloads to Kimi K2 because it was really way more performant and frankly, just a ton cheaper than OpenAI and Anthropic. So China is seeing record growth in their export and manufacturing business. They're seeing record profits in trade surplus, which they're obviously piling into gold and de-dollarizing. They're seeing growth in their local currency and their own payment rails for global trade settlement. And now they're starting to win the AI race. No, but we got to let Washington, D.C. tell you guys, we got them right where we want them. Fuck out of here. This is from Scott Besson in Tucker Carlson's interview. Let me scroll down so you guys can see. 6 months ago. I want to make sure you guys can see this. I just highlighted it. Let me see. Can you see that? Yes. April 4th, 2025. Okay? So the administration freshly inaugurated, right? They're just introducing tariffs. Besson, Scotty B, our boy Scotty B, he was going on a press tour talking about how tariffs, we're going to stick it to China. I want you guys to listen. So take yourself back 6 months ago when they were like, oh, we got them where we want them. China has no leverage, blah, 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 blah. Listen to this clip from his conversation with Tucker Carlson.
So how is China as a nation going to, this is such a big challenge. It's directly in their face. It's about every country on the globe, but it's really more than any other country about China, I think it's fair to say. How are they going to respond? What's the retaliation look like?
Well, I don't know if they can retaliate for a couple of reasons. If you look at the history, and I used to teach economic history, and when you look at the history, we are the debtor nation.
Yes.
We have the trade deficits. The surplus nation is in the weaker position because the Chinese business model, and Tucker, by the way, the Chinese business model and the economy are the most unbalanced, imbalanced in the history of the modern world. We've never seen anything like this in terms of their export level relative to their GDP, relative to their population. So I think it is going to be very difficult for them to try to change the model. They're in a deflationary recession/depression right now. They're trying to export their way out of it, and we can't let them do that.
There's nothing China can do. We are the debtor nation. We have all the leverage. They're screwed. Ladies and gentlemen, and I mean no offense to this administration, to Scotty B. I think Scotty B is working his tail off. And he has... Oops, I just muted myself. He hasn't done the worst job. I prefer Scotty B over Janet Yellen, let's be clear. But ladies and gentlemen, 6 months ago, and you heard me on this show, I've said the same shit every Monday. Some of you guys hate the fact that I've said the same shit every Monday, but I can't help it. It's the truth. The U.S. does not have the leverage it thinks it has. The post-1971 dollar has decimated this country. It doesn't matter if you're left, right, red, blue, up, down. You're getting disintermediated. We've printed tens of trillions of dollars worth of debt. We have nothing to show for it. That loss has to be realized. We are in an extremely disadvantaged position. The literal Treasury Secretary of the United States did not know that 6 months ago. Had no idea. He got on the media and said, we're chilling. China's screwed. All we had to do was this whole tariff thing. Don't know if you heard about it, but boom, magic. I'm like Houdini. It's crazy, guys. It's absolutely insane. But this just goes to show it's all bullshit. Like, remember when inflation was transitory? Remember when the vaccines were going to solve everything? Now remember when we had all the leverage over China? Now I have. The thing is, like, people could say what they want. Bitcoiners have been right for a long time. Us on the Jack Mallard Show, we've been right. Now this was from yesterday. Scotty B. The grumpy old men at the Wall Street Journal's editorial board think China's rare earth restrictions were a surprise. China has been planning this for 30 years while the U.S. was asleep at the switch. We're wide awake now, rallying our allies and de-risking global supply chains. I'm going to play this clip before I go nuts. Boy, what a quick change from China has no leverage. We got them right where we want them. It's called tariffs. We went from that to China's been planning this for 30 years. What? Bro, 6 months ago, this is a complete 180. It's crazy that these people run the government and control the cost of money. Nobody should be in charge of the cost of money, of our time and energy. This is outrageous. All right, let me just play this.
I think it's naive for the Wall Street Journal editorial board, who I call a bunch of grumpy old men, to think that the Chinese weren't going to roll out these rare earth restrictions. They've been putting this plan together for 25, 30 years, and the U.S. has been asleep at the switch. And now this administration, we're going to go at warp speed over the next 1-2 years, and we're going to get out from under this sword that the Chinese have over us, and they have it over the whole world. And this time, we have rallied the allies, and so it is going to be all the Western democracies, the Asian democracies, and India are also going to join us in this in trying to form our own supply chains. We don't want to decouple from China, but we need to de-risk. They've shown themselves to be an unreliable partner in many areas. I think it's naive.
Okay, so in 6 months, we went from, we have all the leverage, we're the debtor nation. How is China going to rebuttal? What rebuttal? They don't even know how to spell rebuttal. To, China's been planning this for 30 years. Everyone else before the Trump administration was asleep at the wheel. And what's our solution? We're not going to decouple from China. Did you hear that? We're not going to decouple. Whoa. We're not going to decouple. No threats. Everyone calm down. Put the guns down. Put the rare earth restrictions down. Put those rare earth restrictions down. Everyone, breathe through your nose, out through your mouth. We're just going to rally allies and reindustrialize so that we don't have such a reliance. Boy, was that a 180. Boy, was that a 180. Scotty B from the rafters. Besant, China made a mistake by weaponizing rare earths because now the West will secure its own supply in 1 to 2 years. Yeah, if DraftKings has a line on this betting market, I'm taking the over. Simon adds commentary, except that China weaponized rare earths versus Japan in 2010. Yet here we are, 15 years later, and still scrambling. Mistake? Whose mistake? Yeah, I mean, listen, guys, the U.S. government is too big. Government needs to be smaller. It's too bureaucratic, and we've created a culture of printing money, no proof of work, no creating our own stuff. None of the world around us is real. That's why when people get radicalized with Bitcoin, is you're like reborn again into the world that makes sense. You've exited Narnia. You've entered the real world. Proof of work, time and energy, lower your time preference, health, family. Whenever I see you Bitcoiners on the street and you guys, Jack, oh my gosh, I've listened to this show. You guys are starting family, you're working hard, you're saving. Everyone in the fiat world, they're hysterical, they're violent. They have no savings, they're living in debt, no family. Oh, man. I told you guys, every episode, let's check in on the stages of grief. So Scotty B and the U.S. at large was definitely in denial 6 months ago. We just listened to it. China, rebuttal? Yeah. You know, you better chance of, you know. I can't believe it, man. All right, whatever. They were in denial. Then I would say there was some anger. I would say now we're probably bargaining. I think we're still in the bargaining. Well, listen, we're not going to decouple. Let's come to a deal. Slow down. We're going to need those rare earths. But we're going to need to remanufacture, allies, 1 to 2 years. I'll take the over. And by the way, here's the thing. If it is 1 to 2 years, which as an American, I hope so, the level of money printing, like guys, this is why I'm so bullish. Like, no matter how you slice it, the level of money printing is insane, and Bitcoin is the best expression of that. Eventually we'll get to acceptance. Eventually we'll be like, we're the United States, we're not China, we need to live on open source software, distributed systems, artificial intelligence, Bitcoin and sound money. We're gonna rebuild the West on top of sound principles that can't be corrupted. Now, Bitcoin can change the world because the world can't change Bitcoin. It's a sound bedrock for a society that can prosper and have freedom ideology. We'll get there. That's acceptance. You know, after bargaining, there's going to be a stage of depression where there's immense amount of money printing. You've got unbelievable levels of political warfare between each other, and inflation comes back in a major way, and everyone's blaming everyone else. You've got Mamdani running grocery stores on behalf of New York City. He's trying to deprive wealth of people that have worked hard for it. That'll be depression. That'll be like, what has America come to? We are sad. Everyone tuning into the Jack Mallers show every week, they were right. That'll be depression. And then we'll be cool with it. And we're going to be fine. We're going to build our way out of it. It's my prediction. All right, real quick, Strike. First and foremost, this is the part of the show where I announce something to you guys because you're loyal and I love you. But you don't go run to Twitter because I'll announce it there in a bit. But we're bringing our lending product to the United Kingdom. We're bringing it first to businesses. So UK business lending is coming this week. We're starting at a minimum of 10,000 GBP. So if you are a business in the United Kingdom, you want to borrow against your Bitcoin, access liquidity without selling it, you can now use Strike starting this week. So be on the lookout for emails, for tweets, for formal announcements. For some of you, it might not be live this very second, but I told you guys I'll give you the secret alpha, the low, the announcements before the announcements on this show. So there you go. And then also, everyone's given us incredible amounts of feedback on things like the Strike card, on things like interest on cash, on things like line of credit. And so, yeah, safe to say all those are coming. And New York, I expect to be very soon. So exciting. I'll answer any questions you guys have in a bit. This is already running kind of long. And then 21, again, we continue to progress towards an approval of our SPAC transaction. Unfortunately, the government is still shut down, but we're going to keep marching forward. So, you know, there's some people on the internet that are frustrated. I don't know. You know, listen, guys. I'm not. I can only speak. Yeah, I can't say much. Just the truth. Just the truth. Me speaking more than I already do would just pose risk to what we're building. And so we're heads down. Again, we're not a treasury company, in my opinion. We're a Bitcoin company focused on financial services, operating cash flow. I'm very, very excited to be to accomplish this chapter of approval and really show the world what we're capable of, myself, Tether, SoftBank, and the rest of the team. But that's the update. And if you guys have questions, I'll answer them if I can. But I obviously just want to acknowledge that I'm the CEO and co-founder of this business, and we're busting our ass, and I could not be more excited about all that we're working on. And yeah, ask me whatever you want. All right. I am traveling, as you guys can see, so I don't have unlimited amounts of time. Dylan knows that. So let me pull up, let me blow up my face. It's the feedback I always get is when I do Q&A. You guys can see me. Look at that. Look at this guy. Look at this chump. There I am. All right. Let me pull up Q&A. I probably got, what do you say, Dill? 15 minutes of Q&A? Try and keep it as efficient as possible. Q&A doc, bang. Oop, nope. There we go. Okay. Sorry, figuring it out, not a professional podcaster. Okay, here we go. Q&A starts now. Macro, big fan. Thank you, man. I appreciate that. It really does mean a lot when you guys come up to me in person. It makes it feel all the more real. Tough question for you. Are you worried about an Executive Order 6102 2.0 attack on Bitcoin? As a custodian, is there anything you could do if this happens? Can we prepare for this? First of all, am I worried about an Executive Order 6102? No, I'm not. As a custodian, is there anything I can do? Can you prepare for this? Yeah, you can prepare for it by taking custody of your Bitcoin. So, I've said before in this show, guys, we're right, okay? We've consistently been right as Bitcoiners. We've consistently been right on this show. We're right about dollar debasement. We're right about the fiat system. We're right about low time preference, hard money. We're right about Bitcoin as technology. My plea to you is don't be wrong for the right reasons. You could be right about all of those things, but held your Bitcoin on FTX and you're wrong. You didn't monetize chaos. You didn't monetize the death of fiat. You didn't monetize the greatest invention of our lifetimes. You were wrong, but for the right reasons. You understood everything. You did the research. You sacrificed. You took risk. But you didn't hold your own keys. And so how do you protect against this? Hold your own keys. I recommend BitKey for those that are more beginner-ish or newer, a little scared, and Cold Card for Bitcoiners that feel either more technically capable or just more competent overall in their Bitcoin journey. But you do it by holding your own keys. And no, I'm not worried about an Executive Order 6102 for a lot of reasons. Gold played a very specific role when 6102 happened. It was the world reserve asset. It was how trade was globally settled. There was world wars. There was fractional reserve running. It's very difficult to migrate with gold, to move gold, to store it on your own. None of these are true for Bitcoin. Countries have already tried to ban Bitcoin. China's tried to ban Bitcoin a half dozen times, and it's worked zero. And so the physical risks of Bitcoin aren't there. The enforcement of something like this isn't there, and Bitcoin doesn't play the same role in the financial system. The United States is more incentivized to support Bitcoin than to attack Bitcoin, and we're seeing that right now. So I think it's one, impossible. Two, Bitcoin solves for all of gold failures, so it's not probable. And three, it doesn't make any sense. It benefits nobody. Okay, Dylan, so here's the thing, guys. Dylan has some questions highlighted, so I'm going to bounce around between topics and answer everything he has highlighted, and then if I have time, I'll circle back to everything else. Bitcoin and markets questions. Question for you, Jack. Do you think we are losing the orange pill battle with Gen Z? Do you feel podcasters are missing out on bringing people in with stories they can relate to? No, I'll answer this in two parts. One, this is a large reason I do what I do, to be totally candid with you. I feel like, listen, I'm not in my 60s. I don't wear a suit. I don't speak as if, there's a gun to my head, or as if I'm going to be graded by an English teacher. Now, some people don't like these qualities about me, but some people relate to them, and I feel like it's a very authentic. I want to be authentic, relatable, and real. I think people are tired of politicians and fake. They're sick of it. No one wants another politician. No one wants a old white corporate executive in a blue suit not being authentic and genuine and honest. And so that's a lot of the reason I do this. And I do all the media I do is because, yeah, I do think that it's a noble effort to go out and just be real. Be like the only speck of truth in a sea of bullshit, especially to the youth, no doubt. But do I think that we're losing? No. Listen, something that I've wrestled with early on in my Bitcoin career and that I see people struggling with today is as if Bitcoin needs to operate on their time. They're like, I've understood Bitcoin. I get where the world should go. What's everyone else's problem moving so slow or not understanding it? And the problem here is, guys, that we are on Bitcoin's time. Bitcoin isn't on our time. Bitcoin's going to be alive and well long after everyone listening to this is dead. And the point in me giving you that context is the world's going to adopt Bitcoin as it needs it. So if there's a bunch of youthful folks that don't have a desire for it yet, can't relate to it yet, don't understand it yet, all we can do is what we're doing now, recording every Monday. I try and accept every podcast appearance I'm offered. We build financial products at Strike that really help change your life with Bitcoin. Allow Bitcoin to actually be meaningful, borrow against it, acquire it, have a crazy, incredible savings account. Or with 21, enter the capital markets, the bright lights, the bigger stage. That's the best we can do. And Bitcoin operates on a need-to-know basis. It's really difficult to get someone to adopt something that they don't care about or they don't feel like they need. And so, when I say like, man, I'm really bullish, I'm really excited because they have to print so much money. The existing financial system is seizing up. The Fed's cutting rates, all these things, it's going to force people to need Bitcoin. The problems are getting exponentially more problematic. And what I talk about internally to my companies all the time, both companies, is, we have to build for the times when the world is going to need us. That's really been the story. Like, I'll take Strike for an example. We experience these crazy levels of growth in spurts because the world all of a sudden, because something breaks, needs Bitcoin and needs us like dramatically all at once. And so, I think the world will continue to adopt Bitcoin that way. I think Gen Z right now thinks it's Elon's fault, thinks Mamdani is the solution, or whatever flavor of this kind of socialism, OnlyFans, violent rioting, protest, murdering people. And then eventually, they're going to really need Bitcoin because all of that pain, all of that frustration, all of that mistreatment is misallocated. And we're going to be here. We're going to be recording this podcast every single Monday, no sponsors, in a hoodie and a ball cap, just being real, just being human. And we're going to have products and equities in the capital markets ready to support them. It's just how I feel about it. You can't rush Bitcoin on the world. You're fighting against the physical realities of the universe. And the coolest part about Bitcoin is we don't need the rest of the world to agree with us or align with us to make progress. Think about how much change, positive change we've given the world and how much positive change we've given each other just by adopting this thing. Like, guys, Bitcoin changed my life in 2013 as an 18-year-old, and the network was a fraction of the size it is today. Nodes on the network were a fraction of the size it is today. So Bitcoin changes the lives of every individual or business or government that adopts it. And so we also don't need everybody. We want everybody. We want the best for everybody. But one of the cool things about Bitcoin is we don't have to protest outside the Federal Reserve building and say, adopt the Bitcoin standard, adopt the Bitcoin standard. We can adopt it on our own individual merit and change our own lives one at a time. Jack, I would love to hear your take on the mentality of spending sats/Bitcoin as a medium of exchange. Isn't a medium of exchange part of Satoshi's vision, peer-to-peer digital cash? Firstly, I don't care what Satoshi's original vision was. Now, I respect Satoshi. We're forever in debt to Satoshi. But I say that to say, like, Satoshi doesn't get to define. Bitcoin is a neutral utility. It's like a neutral, it's like the local park in your neighborhood. If someone says, if I go to play catch with my future son in the park, we're throwing the baseball around, and someone comes up to me and says, the very people that built this park, their intent was to have picnics. And someone says, no, but the mayor at the time, her intent was to have movie night in the lawn. Say, no, well, her neighbor's intent. And the point is, like, who fucking cares? It's a public utility. Nobody owns it. Everyone gets to use it. Do whatever you want. If Satoshi, first of all, trying to interpret Satoshi is useless and pointless. He's not around. He's gone. Did it purposefully. Wants to be left alone. Also was living a life of true anonymity. So, like, their language was purposefully obfuscated and weird at times. So trying to interpret what their intent was is pointless. You're never going to validate it. There's no right answer. And it doesn't fucking matter. If someone's like, I use Bitcoin to gamble, it's not my place to be like, you're using it wrong, according to this dude that we are supposed to interpret their language 15 years ago as they were writing anonymously to a bunch of lists. Who cares? Use it for whatever you want. Now, the way money works is it's highly competitive. If you save and use bad money, you get persistently more poor. Okay, that's just, again, these are physical realities. If you save and use dollars, your life gets more expensive. If you save and use Bitcoin, your life gets cheaper. So people will adopt Bitcoin as money because it's better money. That's just a fact. Whether they also gamble with it, whether they also do other shit with it. Now, whether people want to use it as like a spending vehicle, as a medium of exchange, again, it just frustrates me when people say, you're saving Bitcoin, you're not spending it, you're using it wrong. According to who? According to you? Well, hey, guess what, jackass? I'm not you. So, like, I don't know. I think the reality is, listen, let me tell you guys something. I was the guy that was boots on the ground in El Salvador that worked with the Bukele administration to adopt Bitcoin as legal tender, the first country in the world. I made that announcement at the Bitcoin conference with them. I was there. By the way, fun fact, I have it all filmed on a documentary. I purchased a documentary from the film crew. I own it. It's in a vault. So I have that whole story. I was there. That was me, boots on the ground. And so when people say, do you support medium of exchange Bitcoin? Yeah, I was there in a third world country, grinding and sacrificing to make that a reality. So I absolutely support it. I built the first open source Lightning Network wallet in the history of Bitcoin in my apartment. Yeah, like in my apartment before the empty closet, just grinding. Bitcoin's $300 a coin, and I'm building fucking open source Lightning wallets. So yes, I do. Am I also the guy that has built one of the largest retail Bitcoin lending providers in the world that allows you to borrow against your Bitcoin so you can live on, floated fiat currency while you save in Bitcoin? Yeah. Is that how I live my life? Yeah. Which one's right or wrong? Depends. What version of me are you talking about? What version of the world? What's the context? Where are you living? There's no right answer. The coolest part about Bitcoin is anyone can do whatever the fuck they want and no one can stop them. And so I find it so frustrating and pointless. Like the people that are like, I'm in Bitcoin because it's libertarian currency, it's free markets, humans aren't meant to be governed by any central authority, monetary policy, what we're allowed to put in our bodies, right? Let people do what they want, and there will be natural consequences and the free market will order what is an unruly, society, which is, a bunch of free-willed humans. But then those same people will turn around and say, you're using this public utility wrong. So anyways, long story short, do I spend Bitcoin? Yeah, if I run into a Lightning, a merchant accepting Lightning, I scan the QR code every time. Recently I pay it with my cash balance on Strike. Now I've leveraged this lending market that Strike has helped really pioneer, honestly, over the last year, where I've leveraged that, and we're building a line of credit and all sorts of amazing things. I think there's Gresham's Law. I think people are going to naturally spend the shitty money, get rid of borrow accrued debt and spend the shitty money, like what Saylor's doing, and hoard, save, and never touch the hard money. But anyways, I don't know. I just find it so contradictory that there's people in the Bitcoin community that's like, yes, I'm adopting this distributed money that's a public utility, that's decentralized and no one can control. Oh, by the way, I'm here to tell you you're using it wrong. You're a dumbass. Jack, you say Bitcoin is the truth. So why didn't we get a pump when the trade deal with China was announced? What do you think that means? I think that Bitcoin is reacting to the fact that there's no fiat liquidity in the system. Bitcoin needs dollars to go up. Lack thereof dollars, Bitcoin will go down. Like I've said before, I think that the biggest threat to Bitcoin is if the US government comes out and says, we're fixing the supply of dollars. In fact, we're going to drastically reduce the outstanding supply and make the dollar scarce. We're never going to print another dollar. We're not going to impose restrictions on how you can use dollars, like with drugs or gambling or anything like that. Then Bitcoin would probably go up. It would grind. It would be more of a grind for Bitcoin adoption. Bitcoin equals technology plus fiat liquidity. The technology piece is that you can have a digital bearer instrument. The technology piece is that I can cross a border with 12 words in my head and move billions of dollars. Like that is disruptive, that is innovative. But the fiat liquidity piece has been the recent driver of Bitcoin's growth from $100 to $100,000. They just keep printing money. And so if there's not enough liquidity in the system, Bitcoin's going to react to that. It's going to tell you the truth. It's going to say, hey, like risk assets are in trouble. There is not enough reserves in the current financial system. The government is shut down. The Treasury General's account is way too full. And the Fed is still in QT. And then my prediction is as soon as the Fed pauses QT, resumes QE or some form of money printing, continues to slash rates, and the government comes back online and the TGA starts to get spent, this thing is going to the bazooka moon. Bazooka moon. It's just my take. What was it like back when the $100, the $1,000, and the $10,000 marks were broken? Did the OGs think the same way? Yeah, it was electric. Actually, let me, sorry, I know this might not be the best use of time, but I figure you guys would find this hilarious if you want some just OG stories. Because I used to wear a hoodie that was it was a Christmas sweater that was Bitcoin $10,000, and I would wear it before we broke 10,000, and everyone was like, "You're crazy! You think Bitcoin's gonna break 10,000?" Like literally, like my friends were like, "You dropped out of college for this?" Like, because it would go $1,200 down to $200, and I'm wearing like a $10,000 Bitcoin hoodie, and everyone's like, "Is this guy lost his fucking mind?" And I'll show you. My stepmom, aka the Bitcoin mom on Twitter, she used to post a selfie for every $1,000 Bitcoin would go up. Mind you, Bitcoin goes up and down thousands of dollars a day now. But when we went 4,000, 5,000, 6,000, she would take a selfie, she would tweet it like, "Oh my God, can you guys believe this?" So, yeah, I mean, my dad always told me, trade the position, not the money, right? Because at the time, Bitcoin's going up 10, 20, 30% in a day. Now, a $1,000 move isn't even 1% for Bitcoin, right? So trading the position, not the money, what that means is just because the numbers have gotten bigger, don't get intimidated, don't get scared. don't let it shake your conviction. Trade the position. Is your thesis still real? Do you still think the post-$71 is a cancer? Do you still think fiat is destroying society? Do you still think harder money beats softer money? And so trade the position, not the money. Don't look at the numbers. Believe in your thesis, right? And so, shoot, I'm botching this because I can't find this hoodie that I used to wear. But I don't know if that's what you guys were interested in. Back in the day, it was fun. Pretty crazy. 2017 was the craziest bull run I've ever experienced. I still think the 2021 bull run was kind of muted because of FTX and Sam basically like defrauding everyone. I think they put like a bunch of artificial sell pressure on damn, this is so frustrating. On Bitcoin. If I was in my empty closet, I would just go grab my hoodie and I'd just put it on. Okay, maybe I wear it next episode. Sorry, didn't mean to waste time. That's annoying. All right, I give up. I quit. Why would an OG sell when they could loan against it? Why take the tax bill? There's all sorts of different reasons. I think, first of all, there's probably a lot of OGs that are waiting for JP Morgan or Strike to grow. Like, if you have $9 billion of liquidity you need, that means you're posting $18 billion if it's a 50% LTV loan with a custodian. And it's like, do you trust the custodian? Remember what happened to FTX? If it's that level, you probably want Strike to mature a bit to finance that, or you're gonna want some institutional grade. Like the biggest lender in Bitcoin at the wholesale level is Tether. And so, maybe you're an American, you want $10 billion of liquidity, which requires at least $20 billion of collateral to be posted. You can't post it at Tether because they're offshore. Strike is really like one of the first onshore, regulated, trustworthy lenders. But, maybe the whale is saying, screw it. Like, I'll take the 25% long-term capital gain to not have to post at least double the collateral with a counterpart. What if they blow up? What if something happens? That's my best guess. You also have things like estate planning, where they're organizing their estate, and so it's not like they need the liquidity. Like, what do you need $9 billion for? Maybe we're gonna learn like someone just bought the fucking New York Mets, or I don't know, right? And then we'll be like, oh, that was that guy. But usually that level of wealth, there's estate planning, stuff like that. And so that's my best guess. I don't know. Crazy thing is we're still above 100K. Like the appetite for Bitcoin is substantial in serious size. And again, like this has effectively been a Bitcoin bear market, but the price has somehow chopped and gone up. But like no liquidity in the existing financial system, government is shut down, whale selling distribution, and we're still like above 100K. It's insane. Jack, can you talk about ETFs as an on-ramp to Bitcoin? Should I encourage them as a starting point for friends? What do you think about ETFs? I don't think they're a good starting point. Reason being is they're expensive relative to just buying Bitcoin. You pay an annual fee to hold the ETF. So the ETF is a security. People like BlackRock charge you something like 25 basis points a year. So every single year you have less and less Bitcoin. Now some people justify, well, it's in my brokerage account. Well, I trust BlackRock, and that's fine. If that's what you want, you can do that. You could buy Bitcoin on Strike and you don't pay an annual fee. You pay a one-time fee and you hold it forever, cost-free. You could withdraw it to cold storage, cost-free. There's obviously the custodian risk. Again, hold your private keys. Don't be wrong for the right reasons. So I wouldn't advise Bitcoin on BlackRock, which is really on Coinbase. Just not my thing. And then there's, increasing utility value with just having Bitcoin itself, physical Bitcoin, like stuff like Strike's doing. You can physically borrow against it, line of credit. I don't think it's the best place to start, but owning a Bitcoin ETF is better than owning the S&P 500, or it's better than owning dollars or treasuries. So, context matters. But I think for a lot of reasons, it's an inferior option. It was the option that TradFi needed to justify this shitty system they built. But for a normal person, just download an app and buy Bitcoin. It's cheaper, it's better, it's safer. It's all the things that you should probably care about. Any plans to reduce Strike lending in EU from the current €100,000 minimum? Yeah, of course. I mean, guys, listen, it's all regulation. So Strike, we operate our product and service. We're regulated. We're compliant. I think that's part of being a trustworthy financial institution is we're not taking shortcuts. And what comes with that is it's just a grind with global regulation, different jurisdictions, different rules. So that's just a rule for now, and we're working to lower it, absolutely. Question, how does Strike square up against Lava? Lava is offering an interesting card. Your thoughts? I don't know much about Lava, but, I mean, I'll say this. What will I say? Be careful here. There's so many people, I consider myself a pretty good guy. I'm biased, obviously. But, the amount of marketing in the Bitcoin industry that is effectively just talking shit about me and things I do. There's even Bitcoin companies that talk shit about 21. That has nothing to do with their business or them. They just are building, they're just building momentum against me. So let me just caveat it with that. It's all I don't know much about Lava, or there's all sorts of other companies that bring me up or bring us up. What I will say is Strike is a regulated money service business, a regulated money transmitter, and we lend against physical Bitcoin in a regulated manner. To my knowledge, or what I've been told, I think that's different than Lava, and not necessarily in a bad way. I think they use DLCs, so some form of Bitcoin smart contracts, which could be cool. But it's always been a little confusing to me because you cannot borrow against your Bitcoin without posting collateral in a way that's the person lending to you controls. I can't get a $500,000 loan and give someone collateral if they don't control the collateral. So I've always been confused of there's no such thing as non-custodial lending. You need to give custody of the collateral to get the loan. And then the fact that it's a global product implies, well, it's non-custodial, it doesn't need to be regulated, but there's no such thing as that. So offering a global lending product, at least from Strike's legal opinion, is illegal without getting necessary licensing and compliance. And then, someone said, I don't know if it was Lava or not, but there's, people are giving short-term, campaign, over the next 2 weeks, rates at 5%. I mean, guys, you can't get a HELOC loan against your house from JP Morgan at 5%. I mean, listen, I'll say this. Every day I sit in meetings with Morgan Stanley, SoftBank, Tether, Goldman Sachs. These are the meetings I'm in every single day. There is no Bitcoin lending market at 5%. And as I've said, I'm a stay humble and stack sats guy. If I'm wrong, I'm wrong. And I don't know if it was Lava, those 5. Someone was like, there's 5% Bitcoin lending, and then they clicked into the article and read, it's only available for 2 weeks or something. I'm like, yeah, guys, there's no such thing as that. Tether and some other folks set the rates predominantly in this industry. They're not at 5%. So, I don't know. My opinion is Strike's probably the biggest Bitcoin-only company in the world by a large margin. We have millions of registered accounts, extremely profitable. we're on the brink of getting our Bit license, probably the most regulated Bitcoin company in the world that allows us to offer these services. So, if someone says, oh, we offer the same thing in Europe, but no minimums and everything is amazing. It's like, well, I don't know. So that's my opinion. Lava has done this to me in the past. I don't know about recently. And again, it's become my life. It doesn't really matter too much to me anymore. But Strike has nothing to do with these companies. I have nothing to do with these companies. A lot of Bitcoin companies' marketing is to shit on me or imply we're not, Bitcoin companies used to be like, they're rehypothecating, or, how do you know that your Bitcoin is actually there? Like implying I'm a criminal or implying I'm like Sam Bankman-Fried. So that's all I'll say. I have nothing to do with these people. I don't have a bad thing to say about them. I don't know if I have a good thing to say because I don't know much about it. It seems a little strange to have a global lending product with no licensing and no real footprint and rates that are short term for 2 weeks only. I don't know. I don't know much about it. I don't know. But it's good. I mean, there's plenty of room. Building Bitcoin financial services is a great business. It's hard. Getting all these licenses and the scale that we've reached and compliant globally is difficult. But the more the merrier, in my opinion. I don't know. Maybe I like a lot of these folks more than they like me for some reason. Hey, Jack, will there be an interest-only Bitcoin line of credit option? For example, payments start out as only the interest for the first 4 years, and then you start paying back the principal and interest after. Yeah, totally. So I've talked about line of credit, interest on cash. So, if you guys have a cash balance that you want to put into the pool of capital that we lend out, we can give you 6, 7, 8, maybe 9% on your cash. All that's coming. You guys are very clear about the feedback, what you want. And then a lot of you even want a Strike card. My question was do you want a card where, you're going to use our card over Amex? Really? Because, Amex is going to outcompete us in rewards, surely. Is it the utility value? And you guys have even said, yeah, the utility, some rewards would be nice, but the utility value would even be incredible. So, yeah, just stay on the lookout. We've got New York, lending in California, Texas. We've got lending UK, lending throughout the US, hopefully getting our Bit license, we've been told very shortly. And then all these, financial service products, which are very exciting. So, yeah, all good. Strike question, when can we see some more merch? That's a Dylan question. I've been pressing Dylan on that for a while. I'm joking. I don't want to pick on Dylan. It's a Dylan and me question. I know that it's a Q4 goal for us this quarter. So we've got a few more months before the quarter ends, and I think part of our plan is to get you guys some merch. So definitely soon. Okay, this question is categorized in other, and then I gotta go. How do you maintain a positive mindset despite the disappointing performance we have seen this year? I don't know if I agree with the premise of the question. I don't know if the performance has been disappointing, bro. Sure, in this pocket of time, Bitcoin hasn't performed as well as gold for now. But over the last 5 years, Bitcoin has destroyed everything. So, it's what I tell my friends I grew up with that, still can't find a way to get themselves some Bitcoin, despite literally growing up with me. So imagine, over the last 13 years, every time you go to a Bears game or every time we go play pickup basketball, you just hear me yapping about Bitcoin. They still haven't bought any. And one of the things I tell them is they say, oh man, it goes up and down, it's volatile, what if this, that? And I say, listen, if I told you you could buy something that starts here, at the bottom left, and ends up here in the top right. Wait, let me see myself so my fingers are in there. Starts bottom and ends up top. And the journey there is like this, instead of like this, like a straight line that you all want. Who cares? Suck it up. I never said holding Bitcoin would be easy. I said it would be worth it. There's a huge difference. So to me, nothing has changed about my thesis. Nothing has changed about my worldview. If anything, I get more conviction when I see Bessent talk, when I see issues in the current financial system, when I see Jerome Powell's press conference. So my worldview is only getting stronger in conviction. My thesis is only getting stronger in conviction. The things that I think are important, family, health, low time preference, savings, nothing's changed. And so, yeah, has it been, like, is underperforming gold more difficult than when we, like, outperform it by 10? Sure. But, like, I'm going to kick and scream like a toddler? No, I'm going to fucking be a man. Build even more products for you guys. Generate more profits. Stack even more Bitcoin. I'm going to call Tether and say, let's enter the capital markets and give the public markets a real Bitcoin company. Not a Coinbase, not a treasury company, a real Bitcoin company. That's what I'm doing. I don't know. Is that weird? Is that unique? I hope not. What? Because Bitcoin's seen major distribution from early adopters like it's IPOing, and we are like slightly on par with other assets as opposed to like blowing them out during like QT and tight liquidity where the financial markets are about to seize up. And I'm supposed to be like, oh, screw it. No, I quit. Fuck that. I don't know. So how do I do that? I don't know. Not be a bitch. I'm just kidding. I'm just kidding. I had to say it. Teed me up for that one. You teed me up for that one. I don't know. I also think Bitcoin grooms you in that way. You know, proof of work. Nothing's for free. You don't just get to buy this thing and coast. Hard work. Hard work. Create value for others, time and energy. I mean, I've become ruthless. Like, adopted carnivore as a diet. I like all sorts of, you know, biohacking, health, focus on family. I have 2 businesses now that, you know, produce, they're net productive to societies, are profitable companies, that, right? So, I don't know. Maybe it's just the Bitcoiner in me after all these years. All right. With that, I'm late to dinner. My dinner started 7 minutes ago. It's just how much I care about you guys. You see that? Love and affection on this show. Love and affection. JMS crowd over everything. I love you dearly. You guys keep giving me feedback on our products at the companies. They are being incorporated. It's really the coolest relationship between a business, its CEO and founder, and the customers. So you guys like tune in, you troll me, you leave comments on YouTube, and then we just like build revolutionary products for you. That, it doesn't get much cooler than that. So you keep asking me questions, letting us know what you need. And then as far as the show, giving me feedback. The show keeps getting better because of you guys. So this is, again, a little bit of a longer episode, a 2-hour one. But the consensus is you guys like the detail. You like the longer-winded. Maybe this was too long-winded. I'm not sure. But let me know. Love you deeply. Appreciate you all. And I'll be here next week. Wouldn't miss it for the world. Take care.